Hi, I'm Alexander and I coach traders on the psychology of risk management. If you're struggling with risk management, email me and I can send you some free information. Enjoy today's lesson. Today we're going to review a trading plan. If you want a copy of this trading plan, please click the link below to my website, www.traderhelp101.com. Email me and in the subject line, please put trading plan and I'll get this over to you. It's going to come in a PDF format and it's going to be called Plan Your Trade and Plan Your Risk. I'm going to right click here. I'm going to open it with Adobe. And here is your trading plan. Now the difference between a trading plan and a trading journal is a trading plan is what you go through, your checklist, the criteria you use to enter the trade. Your trading journal is writing about what happened during that trade. Maybe you want to implement new rules. Maybe you've made certain decisions that were very beneficial and you want to repeat that. And maybe you made some mistakes that you say, you know what, I don't want to repeat this. And that's what you're journaling. So you're journaling about the trade. But the trading plan is the criteria you use to enter the trade. And that should be done before. And the reason it should be done before, it's because if you do this, if you're entering trades in the heat of the moment with no criteria, then it cannot be repeatable. So make sure you go through your checklist and a process. And when you're creating your trading plan for a trade that you're going to enter, and you're asking yourself certain questions, it might allow you to say, hey, you know what? I need to take this trade. Or, hey, you know what? I need to not take this trade. Or if you're in a trade already, you're going to say, you know what? I need to exit this trade immediately because this does not look good because I didn't follow any of my rules and it was an emotional trade. So when you say reasons for entering trade and you're going to fill out these rows, you're going to say it was fear of missing out, it was revenge trading, it was boredom. And you can see that emotional trading is a style. So this can get you started to being a more rule-based trader and having a certain process and more importantly a routine that you follow on each and every trade. So let's fill out some of these fields and have this ready at your desk, printed out, or have it open. Therefore, you just enter the information once you enter the trade and it's easy. Don't wait until it gets so backed up that now you're overwhelmed with journaling and now you don't want to journal because you're so backed up on your trades. So make it a routine, a habit. You enter a trade and you journal. So let's say I enter a trade. Fill out some of these fields. On February 7th, 12:30, on Goldman Sachs, I was bullish. Well, 100 shares. Entry stock price. More importantly here, stop loss. Make sure you respect your stop loss. Risk management is by far one of the biggest reasons traders get hurt because they don't follow risk management rules, or when it's time to take a loss, they don't want to take it. Always remember there's going to be another trade. You're not going to make all your money on a single trade, regardless of how big that profit is. So once you filled out these fields, you can see entry stock price and risk is $2 to try to make 6. So I'm risking $2 to try to make 6. I'm going to rate your entry execution. I'm going to say good. Let's say the balance of my account at the time of trade was 35,000. Now I scroll down and here, these questions are important because they allow you to really think about your trade and more importantly, be strategic and more professional and have just a rule-based structure. Reasons for entering trade. Which time frame did you analyze before entering a trade? Next row, what strategy, signal, pattern, trigger, etc. did you follow to enter the trade? What are the market conditions? Other thoughts, trade developments, preparation for entering the trade. And you're going to have the same fields for reasons for exiting the trade. And on the bottom here, evaluate your execution from entry to exit. And here are some ideas you can fill out in these rows. What did I do well? What do I need to improve on? What steps will I take to improve? What I traded differently and how? How did I prepare for the trade? Other thoughts. And here, the same thing as the top, but this is for the exit date and time, exit stock price, close number of shares, stopped out, target price. Rate your exit execution. Let's say great. Net profit and net loss. And remember, a trading plan is everything that you use, the criteria, the checklist that you go through to enter the trade. A trading journal is now digesting all the thoughts and everything about that trade, maybe the market conditions and everything else that you want to maybe review, adjust, and implement. Now, when you're doing this, please do not beat yourself up if you made certain mistakes and you're following certain rules. Leave that out. Make sure you're very kind to yourself. Don't try and be perfect with trading. If you're trying to be perfect with trading, it's going to bring a lot of frustration and you're going to be second guessing your decisions. Once you're into the trade, it's in the past. It's either going to hurt your account or help your account, and you move on to the next trading opportunity because you are a trader. Now, this is the beauty of this trading plan. Once I click here, it says click to select image. It's going to allow me to input a stock chart. So I'm going to go to browse and I have my stock chart ready. Goldman Sachs, February 7th, 10-day, 30-minute. I'm going to left click. And there it is. This has 4 boxes for you to input a stock chart. And you're going to take a screenshot, and I'm going to show you that now, and input it. This way you know when you entered on the stock, and you don't have to try to remember what the stock was doing, where it was, what you were thinking. And therefore, once again, if you do this right away, it's very, very helpful. You can print this out and review it later, and you'll have good reference on what you did on that trade and what the stock chart looked like. If I want to enter another one, I'll left click here, go to browse, and let's say Goldman Sachs 1-year daily, and so forth, and there you go. Now, if you don't know how to get a screenshot, we're going to review that right now. I'm going to go to my snipping tool, here it is. I'm going to left click, it's going to open up. I'm going to go to mode, rectangle, I'm going to click new, but not yet. I'm going to minimize this and let me get the stock chart up. Now I'm going to click new. It's going to have this crosshair. It's going to get a little bit cloudy. I'm going to left click, hold and drag, left click, hold and drag all the way down here to where I want the screenshot to be taken. I'm going to let go, and there it is. Now I'm going to go to File, Save As. It's JPEG, and I'm going to look for my Google folder. So create a folder so each stock that you take a picture of is in the folder so you're more organized. And I'm going to say Google. I took this picture, let's say February 7th. And this is a 10-day, 30-minute chart. Now I know what stock, what day I took the picture, and what time frame. I'm going to press save. I'm going to go back to my trading plan. I'm going to left click image. I'm going to go to browse. And I'm going to look for my Google folder. There it is. But the picture is here. And there you go. Now, if you've made an incorrect input, you can left click, clear image, press OK, and you're done. This is super, super helpful because trying to remember your trades and trying to write down your trades and being organized and how do you write down your trades can bring a lot of anxiety. This is to stop with all the thoughts that you have that are racing when you're trying to place a trade and everything that goes through your mind, anxiety, fear, confusion, information overload. You look at your trading plan. What was I going to do? What did I plan for when the stock reached certain prices? Oh, okay, here it is. This is what I'm going to do. This is my entry. This is my exit. I know my risk. I'm comfortable with my risk emotionally, financially, and mentally. And I'm okay with it if I get stopped out, and I'm ready to enter the trade. So it's planned. I'm not rushing, and there's nothing that's gonna stop me from entering the trade because I am ready to trade. Now, if I right click and I just open it up as a PDF, not in Adobe, I'm not gonna have the function to input a stock chart. I'll be able to use the PDF, but not in the way that the Adobe allows you to put the stock chart embedded in here. So if I left click here, you can see that it's not allowing me to input a picture, but I can still use it here, and I can input and save it. Now, each journal entry, each trade, if you place 10 trades, you're going to have to go and say save as, let's say Google, and repeat the process, save as Apple, save as, and always do a journal entry for each individual trade. Okay, so I hope this was helpful. This trading journal is very, very good. It allows you to go through your process, to think about questions and see if you missed anything, and more importantly, allows you to have structure and allows you to just be organized. And maybe all this will relieve some of the anxiety. You look at your trading plan and you say, wait, you know what? This trading plan, I like it. I'm going to execute. I'm going to follow my game plan, and I'm going to let the stock market do what it wants to do because I'm already prepared. If it goes up, I'm going to take profits here. If it goes down, I'm going to get stopped out, and I'm perfectly fine, and I'm moving on to the next trade. Once again, once the trade is placed, it's in the past, it's either going to hurt your account or help your account. All right, traders, thank you so much for your time. Trade safe, and I'll talk to you soon. Bye.